Hello, everyone. Welcome back to another thrilling episode of our weekly series. Today, we are embarking on an insightful journey into the world of price action based technical analysis, focusing our lens on the ever dynamic XAU USD market. Before we dive into the details, let's take a moment to reflect on our recent performance. Last week was nothing short of spectacular. We witnessed an impressive 230 pips surge in the price of gold, only to see it retrace back to where it all began following the Federal Reserve's decisions to maintain interest rates at their current levels. As a result, we capitalized on this market volatility, seizing over 500 pips from well-timed buying and selling opportunities, all of which is well detailed in this commentary you see here. For those eager to revisit this commentary for educational purposes, you can conveniently find the link in the description box below or at the top right hand corner of your screen if you are watching on my YouTube channel. Now, as we gear up for the new trading week, gold price is once again poised to challenge the critical 1925 zone. The burning question at this juncture in the market is, will the reversal in the US bond yield trigger a bullish sentiment in the days ahead? To unravel this mystery, I have conducted a comprehensive analysis of the current market condition, employing simple parameters such as trend lines, key levels, and chart patterns. This insight will provide us with an understanding of the historical movement within the XAUUSD market. But a gentle reminder, this video serves as an educational resource and should not be considered financial advice. My primary aim is to equip you with an in-depth knowledge of the XAUUSD chart and enhance your proficiency in price action analysis. Always remember, Forex trading carries inherent risk, so exercise caution and consider consulting a professional financial advisor before making any investment decisions. With our foundations firmly laid, let's get right into the business. If you recall from last week, the setup we identified on this chart hasn't undergone significant changes as the uptrend continuation pattern we identified last week, of course, still remains very much intact, as you will be seeing on the daily time frame here. For a more comprehensive breakdown, I encourage you to revisit my previous video. Today, our spotlight is going to be on the 4 hours time frame, where the pivotal level at the 1925 zone, which of course is going to be serving as our key level for the new week, is still very intact. Now let's look at the 4 hours time frame here and let's see what I saw here last week. Now the first thing we observe here is the fact that price action has been bearish, and in fact, to emphasize this, I took into consideration the nature of price action since the last week of the month of July. And if we do it appropriately, you will see that after connecting the series of lower highs, we have a couple of descending trend line which further emphasize the presence of the sellers in this market. However, something interesting happened mid-month of August, which is likely trying to change the scope of the bearish perspective here. Now, the first thing I observed here in the middle of the month of August was the lowest point price action has been in a long time, and that is exactly around the 1885 level. Now, for this bearish momentum to be confirmed, we really need price to break down the zone here, giving us a lower low to emphasize the strength of the sellers. But instead, what we saw here since the beginning of this month was the fact that sellers were unable to break down the structure to give us a new low. As you will see, we had the nearest attempt to break down that low was around the 1900 area, and since that moment price has been finding buy pressure above that level. Now with the situation we have here and with a higher low, it's a clear sign that buyers are gradually gaining momentum behind the scenes. Now if we zoom into what has been going on here in the last couple of weeks, you will see that since price tested the 1900 area right here, we saw that interesting bullish momentum giving us a beautiful impulse leg to emphasize the strength of the buyers in the last 1 week, in the last 2 weeks I think. And after the Fed's interest rate decision, what happened in this market? We saw a crash of that price back into where price action started last week's trading session, which falls exactly around our key level at the 1925 area. So I will encourage you to watch my previous video on the XAUUSD to understand how significant this zone is in this particular market, and in fact how we did identify that level. Now at this point in time, price is back into the 1925 area, and in fact when price got into that zone, we begin to see some consolidation phase happen around this area, which further emphasized the crucial nature of where price action is at this point in time. Now, interestingly, last week we saw a little bit of a breakout of that descending trend line here. We saw price break out of that descending trend line, and for me, this is a sign that buyers have the potential of breaking out of that structure. Now, I'm of the opinion that it is very likely that price will continue to the upside based on this technical structure. And as a result of this, I want to be considering this impulsive move here as a leg we are going to be using to determine what will happen next. And if we bring out our Fibonacci retracement tool, run it through the previous impulse leg, as you will see here, I want to consider that crash that happened during the second half of last week following the interest rate decision as a retracement move. And if we bring out our Fibonacci retracement tool to try to project where the retracement phase may likely end, it will fall between the 50 and the 78.6%, which is going to be serving as our golden zone area. And if you mark this zone appropriately, you should be having between the 1925 level and the 1910 area as an area where we shall be looking out for buy pressure reversal patterns that supports the idea of a bullish momentum to join a bullish trend. Now let's look at the structure closely. Ever since price came into that window, that is our golden zone area, we saw the resumption of buy pressure, and in fact I would like to see some double bottom structure around this area, a further breakout of that descending trend line to give me an opportunity to join the uptrend scenario. However, if price action does not do this and instead it continues to drop and find lower lows, then a breakdown of this descending trend line here at the 1910 area could incite a selling opportunities, while the further breakdown of the 1900 level will be welcoming more selling opportunities here. So you would agree with me that we are at a crucial moment in this market where price still remains around that our key level at the 1925. So we want to be seeing how market participants will be reacting to the zone during the early hours of the new week to decide what our next line of action will be. However, it is also important that we take into consideration the fundamental factors that could affect this market in the coming week. And for those who have been with me in this community, you know how important checking the economic calendar is, as these fundamental factors often manifest on the chart in technical patterns and price movement. By monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns. Now, if we go into the economic calendar, I was able to pull out a handful of high impact events from the US economic docket that we all want to be looking forward to. Now, on Thursday, we have the gross domestic product annualized for quarter two. We have the Fed's chair speech, which is coming up on that same day. And on Friday, we have the core personal consumption expenditure, which is another inflationary measure to see how the inflation is in the United States. Besides all these high impact events, there are also some medium impact events which we also want to be looking at for this week, like the housing pricing index and of course the durable goods order. Now, going back into the chart, let's remain patient and of course trust me, I will be with you in the comment section as always. After monitoring our participants in the market will be reacting to this crucial zone around the 1925 level during the early hours of the week to decide what our next line of action will be. If you have found this content helpful and useful in making your independent trading decisions for the week, I would greatly appreciate your support by giving the video a thumbs up. Your likes are valuable to me and helps the algorithm promote the video to a wider audience of traders who may find this material beneficial. Thank you in advance for doing so. If you haven't already, I encourage you to follow me on this channel for more of this insightful content. By subscribing, you would always stay updated with the latest ideas I share and of course receive notifications whenever I upload new videos and commentaries. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye bye.